I'll just start off by saying, everybody who's been to office hours before, welcome back. The topic for discussion is interest-bearing Bitcoin as decided by the community. So we'll have John and the team kick it off and do a bit of an intro. Then we'll open up to some questions. So we just ask people to stay on mute while anybody's talking. If you don't feel comfortable with audio, no problem. Feel free to send through some thoughts, questions in the chat as well. We will focus on the topic of choice, but should there be some extra time near the end, we could maybe answer some other questions. But again, today's focus will be ibBTC. And with that, I'll send it over to you, John.
Cool. Thanks, Will. So like I said, general structure, I'll usually just kind of do a little overview and then hop into questions. So ibBTC, like I said, is interest-bearing Bitcoin, something that's been in the works for a while now. I think it was pretty soon after launch. Started, I think Chris had connections with the DeFi Dollar team, brought them into the Builder Discord, and kind of started working with them on this product. And what is interest-bearing Bitcoin? So in the easiest sense, it's kind of like an index product or like an ETF or something like that. But ETF, I guess, is usually made up, if you're thinking of something that's like a made up of multiple components versus just like a tracking instrument, it's usually different things. What the DeFi Dollar product does and what ibBTC will be is an aggregate of all of the Badger vaults. So what does that mean? So right now, when you go into Badger and you deposit you can choose for any of the Bitcoin vaults. There's the Ren Curve vault, there's the S Curve vault, there's the TBDC vault, SBTC Curve vault. So I think there's 3 or 4 different vault products that you can deposit to, but they take different LP tokens from Curve. And then when you deposit them into that vault, you're basically getting a separate, what we call the B tokens, which is a separate ERC20 that you then take and stake. We are currently working on the geyser removal, so removing staking for all vaults, which will be done in the next week or two, I think. We have a lot of emissions changes coming. But once that's done, that means that now you hold this B asset, similar to how when you stake DIG, there's nowhere to stake DIG. You just take DIG, you put it in the vault, and you get B DIG. Similar to how it works with the Curve vaults. You take the Curve token, you stake it, and you get the B token. And then we have the strategy running in the background that takes your Curve token, deposits into Curve, harvests the yield, etc. We have the Urine vault coming where you'll deposit WBTC. That one will go into more of a wrapper and then use numerous strategies on the back end to then go and earn yield. But that, again, there won't be any staking. You'll deposit, you'll get, the B, whatever we're going to call it, single asset WBTC here in Vault, some absurdly long name, I'm sure, token. So now we have all these users that have deposited different things, BTC equivalents, like you can consider WBTC, and then any of the Curve vault, the Curve LP tokens, as just BTC equivalents, right? So if you are putting Ren BTC or WBTC or any or SBTC into any of the BTC LP pools on Curve, you kind of expect that to retain its value against Bitcoin and gradually kind of just go up relative to Bitcoin, because there's no other asset, there's no impermanent loss, nothing like that. So now we have these users that have you could have deposited into 3 different vaults, and now you have these 3 different B tokens. So, okay, that's fine. You're earning yield on those by being in those vaults. But, as we've been doing with Badger and with DIG and bBadger and bDig, we're looking to go make these assets useful. 1, to just bring more utility to the users. And 2, if there's more utility for an asset, there's more of a desire to go and use it, because you can then leverage it up and get more get more value from it, and that actually can reduce the need we have to keep high emissions to keep TVL and keep users. So, if you're looking at one option where you can get, 15% APY on your Bitcoin, but you have to stake it and then you can't do anything. But then you have another option where maybe you can get 13%, but then you can use it as collateral to take out another loan to then earn more yield. Well, maybe you go with that one because you can actually then leverage up. So that's the approach that we're looking at, but it becomes difficult. So a lot of these, you have to go kind of talk to these different lending protocols or the communities and put in proposals to get assets added. Sometimes we need to incentivize liquidity. If you want to make it a available collateral asset, there needs to be some level of liquidity so that if your loan does fail, that you can be liquidated. So it makes it, we can't really do that if we have 6 different assets that are basically the same thing, which are these different BTC based vault assets. So this gets the long way to what ibBTC is attempting to do, is saying, well, okay, we have all these vault assets. They're generally equivalent. They're earning reasonable, similar yields, but then you can't really do anything with the B token once you have it. So when we use DeFi dollar, you can deposit them and mint a central ERC20, and you can deposit any of them, and it holds them in the background. And the same, you just do a little math on top, and yes, if you're in the one that's earning maybe slightly higher APY than the others, if you're holding ibBTC, you might be not getting the peak APY, but you're still getting something very close. But now what we can do is now we have one asset that we can go and talk to lending protocols and put in governance proposals and incentivize liquidity for. And now, okay, great, you can come and use Badger, and you can have you can do use whatever use whatever BTC asset you want, get the asset you need to deposit to a vault, get that vault token, take it to DeFi dollar, and we'll have it embedded in the Badger app as well, mint ibBTC, and then, okay, great, now I can go use that as collateral. I can use that in an LP pool and earn incentives for an LP pool that we might be incentivizing, things like that. So that's the high level of how it works. Anyone, I guess I'll stop here. Anyone have any questions? Just kind of like the general structure, or why? The only other thing I was going to kind of cover is kind of our general strategy for it post launch. But stop here for any questions on mechanics or the purpose. Nothing. Like I said, like Will said, if you don't want to speak up, also just throw stuff in the chat. More than happy to answer there. And so I'll wrap up kind of the way that I look at ibBTC is that it's not really a retail focused product when you think of like who's going to be interacting with it. Because if you want to get from start to finish using the Curve vaults, you have to deposit into Curve, get the Curve token, come to Badger, deposit, get the B Curve, BTC Curve, whatever you want to call it, vault token, and then you need to take that to DeFi dollar and deposit that and get the ibBTC. So that's not cheap when it comes to gas, and especially unwinding it, which you should always keep in mind as well. It's going to be hundreds of dollars in gas to do that. So even if we have ibBTC earning a nice yield, and then you can use it for other collateral purposes, those things take gas as well. Unless you're doing it with maybe half a Bitcoin or maybe that range. I haven't done the math on it to see where it makes sense. It's going to take you a long time to, if you're earning, even if you're earning 15% APY on that, it's going to take you a long time to make that gas money back. So the way I think of ibBTC is it's almost like gbTC, if you're familiar in the regular markets, the Grayscale Bitcoin Trust. It's mintable by accredited investors, and then but it's tradable by anyone on the markets. So, I can go to Grayscale if I'm an accredited investor, an institution or whatever, and I can mint a whole bunch of it. I can give them real Bitcoin and then mint a whole bunch of GBTC, and then I can sell that into the market. And that's a gross oversimplification of how that structure works. But in general.
John, just a question, because it seems like the solution is like when there's a big secondary market, right? So once there's a secondary market for ibBTC, then anybody can just buy it. Have we thought about emissions yet? Because maybe it makes more sense to offer emissions to people that are depositing into it, right? So to offer some sort of a reward to like cover the gas and to make it worth doing to like deposit it in, right? And then basically we create a lot of liquidity that then everybody can go buy and trade, hopefully for reasonably cheap if the token's not stupid expensive to work with.
Yeah, I think my take on it is, I don't know if we need to incentivize minting. I think my hope is that the economics would work out to where it's a somewhat desirable token to have, and that it trades, and we'll incentivize liquidity for it. And this is kind of why I was going and incentivize liquidity for it. So if you're sitting on WBTC or NBTC, we want to make it to where, you can't get it for free anywhere, right? Even if you're a whale, like you got to pay the gas, right? It's some percentage of that.
But if it's,
I hope that right. It's just a small percentage, but like if you're a retail looking at, okay, I'd like to have exposure to this product because I'm sitting on Bitcoin now. Even if you're just saying like, I just want to have interest-bearing Bitcoin. I want Bitcoin exposure, but like, why would I not have interest-bearing Bitcoin exposure if I want Bitcoin exposure? Ideally, you just go to Uniswap, SushiSwap, wherever, whatever DEX it's most liquid on, go to an aggregator and buy it there. And hopefully it's deeply liquid. I think that's what we want to do.
Okay. The goal to get that liquidity is to incentivize some sort of an LP pool. Okay. Yeah. And then that works, right? Because then there should be a bunch of liquidity and then people can buy it. And will there be, I guess there's the native interest if you're not staking it, right? So I can buy it, take it out of LP, and I'm still getting this like reasonable amount of native interest without putting it back into LP.
Yeah. So the way I think it would work is, right. So, when you're doing the LP, if you're, we'll be LPing it against WBTC or I'm assuming, you're giving up some of that interest, right? Because your position's half WBTC, it's half, not interest bearing, but you're getting the pool fees, and then I'm sure we'll be incentivizing it. And I think it's going to start on Sushi because I think we're going to get Sushi rewards on it, but I think we're going to also look at doing a curve with the SBTC. So on Curve now you can do the permissionless pools. So we can do an ibBTC to SBTC Curve LP, which is comprised of SBTC, WBTC, and RenBTC pool. So that gives you more capital efficiency, which is nice. My hope is that it trades there's demand and it trades at somewhat of a premium, which would then incentivize the minting side of things. So we don't have to do direct incentives there, but they can do the math and say, hey, if I mint $1 million of this right now, I can go sell it into the pool and earn my, 0.5%, which on $1 million is like an actual, a worthwhile amount of money to do it for.
Yeah, cool. Sounds well thought out.
Thanks. And $1,500 Badger. Thanks for the nice transition. It is. We've shared, I guess, our cross-chain plans, and obviously we've launched on Binance Smart Chain, focusing on B Badger and B Dig pairs. ibBTC, at least in what I'll be pushing for, what I've already been kind of prepping when we're talking to people on the other chains is. We want to come around and have good liquidity on all of the, layer 2 and other chains. Like that's kind of going to be our package is, okay, B Badger, B Dig, and ibBTC. Like we want these to be liquid and available, when we go to Binance Smart Chain, Matic, Phantom, Avalanche, wherever. So yeah, totally with you on that. Yeah, the name is tricky. We were going to go BBTC because it's like Badger BTC, but then there's the Binance BTC. And I think the I got thrown on there from a different one, from something else that was like IB something. If anyone's got good suggestions, it's not, we're kind of rolling with it, but it's not set in stone yet. It seemed like throwing the I on there and then saying, oh, it's interest bearing kind of made sense. And then I guess you said, so everything Badger so far is commercial facing and ibBTC is retail facing. I wouldn't say that necessarily. My take on, how expensive stuff is to do a lot of times is that, I think it makes sense to focus on, okay, here's big, great value add products that maybe are expensive, but then making sure that there's ways to access them that aren't expensive. So not necessarily trying to drive down the cost of doing the thing that's impactful, but making sure that when you do the thing that's impactful, that other people have access to it too. So it's, basically like solving for whales and shrimp, but like not worrying about like the dolphin solution too much. So I think some of this stuff is a little more institutional, like, a lot of what we do, like, so I think, staking and holding and using Badger and Dig, obviously that's something that we were focused on making available to everyone. So that's why we're removing staking. That's why we're going to be issuing rewards in pre-deposited into the vault assets so you can unstake at your leisure. And I think, that's stuff that we're going to do to try to make it as easy as possible for folks. But the big value or the big win, and you almost have to do that if you're a protocol, if you're a big project, working in the space, like you kind of need not necessarily institutional money, but you need institutional grade money. We take small amounts of fees on all the vaults, on all the performance of the vaults, and to fund the DAO and to get good returns to Badger, which we're working on distributing, how we're going to distribute all the revenue to at least a portion of it to Badger holders directly. That's what that's where we kind of need to look. So it's okay. Well, how can we intake? How can we get TVL? What does the product look like when TVL is $10 billion, and how do we get to $10 billion? Well, there's going to need to be, some focus on institution grade. Okay, great. Well, we do that. What does that generate? How can we make those, use what that does to have good products available to everyone? Because the community, it's like you value the assets in the system, but you need the community is more valuable. You need a great community to help drive the thing forward. So, that's just kind of how I think about things a little bit. Cookies, we see ibBTC competing with BDig. I wouldn't really put them in the same category. Dig is definitely its own animal, and hopefully, the goal would be long term to have pools with either Dig or BDig paired against Bitcoin or ibBTC or something like that. But we have to reach stability first, and maybe the next office hours we'll put out might be the good time to cover more in depth the stability vault, which is in audit right now, and I'm it's on my list of things to do a write-up that I'll probably post on Medium or something like that on how it's going to work and hopefully how it'll stabilize Dig. And once we have that, I wouldn't say they're competitive, but they're not totally separate. And my goal, my thought is the ideal Dig is actually something that is more interest bearing, meaning that you eventually. So I would say we reach some level of stability first, and then look to see if we can tweak the parameters to have kind of sort of a target inflation rate. So if we reach some stability, but make the target, instead of just matching Bitcoin, say match Bitcoin plus 5% annually or something like that. So you could rebase based on those parameters. It's not impossible, but it doesn't really make a whole lot of sense to do it now when it's, wildly volatile relative to Bitcoin as is. Yeah, so would ibBTC on other chains still be based on ETH Curve vaults or those chain specific vaults? So good question, stylish squid. So that bears a question of just vaults on cross chain period. So the default is just going to be everything is running on ETH layer 1 as far as the background. And the asset is what's portable. So you have this ERC20 asset. In the background, there's these layers, right? It's like a Badger Vault, and then in the Badger Vault is running a strategy that takes these tokens that were deposited and deploys them into another protocol that harvests the tokens being distributed to that protocol, sells them, reinvests them, and just kind of does that over and over. Right now, all of the yield, or at least easily accessible yield, is on layer 1, so that'll continue to happen. And basically that'll just flow because the redemption price of ibBTC will just continue to go up relative to Bitcoin over time. So you just hold this asset, and what will keep it, what will drive the market value, kind of tracking that as well. Even if you're over on Matic or something and you can't redeem it on Matic, is there will be arbitrageurs that will look and say, okay, it's trading 10% above what redemption value over on Matic. If it's doing that with enough size, they're going to go over there, buy a bunch of it, come back to, they're going to come to Badger, mint a whole bunch of it. So they'll pay all the gas, mint a bunch of it, and then go over to Matic and sell into that market. And they can do that pretty quickly. So that'll be the connection. For the separate chains, we're deploying actual. So we have, I guess, the Binance chain, the vaults on the Binance chain right now that are just basically focused on LPs, and that's kind of what we're doing across the board. I think once there are more direct ways to earn with Bitcoin and other things on other chains, first question will be so let's take a step back. So when it's going on other chains, I don't think DeFi Dollar necessarily has that available right now. And I don't know if they're building into it as far as, okay, can we accept other assets? Now, what you can do, so what we do retain some control to approve assets that can be added to ibBTC. So it's not just static. It's not just, okay, only these 4 vaults. We could approve the Yearn vault to be added. We could add more. If we launch a vault on, just say, Matic, that is, earning reliable yield, and we think it, and I think it only makes sense to add something to ibBTC if you think it'll earn decent yield for a long time. If it's just like for a month, like it's just not really worth the effort. So let's say we could launch a vault on Matic that gets yield from some token distribution. That now is an ERC20 token. It's on Matic, but you can bridge ERC20 tokens back to ETH layer 1. So we could approve for that vault token to then also be added to ibBTC, but you would add it on layer 1. And then, the ARB would kind of have to work the other way, where if someone's coming and then saying, okay, well, it's trading too low on, it's trading too low on Matic, ibBTC, that is, you go and buy ibBTC, you bring it to layer 1, you redeem it for the underlying assets, then you take, obviously the layer 1 ones, and you can come to Badger and extract the curve and work the curve tokens, and then work your way back into the actual WBTC and sell it. But then you would have to take the one and go back to Matic and redeem it over there. So not impossible. It gets a little funky. I think, we're with the launch of the Yearn Vault that will run up to, I think, 10 strategies in the background. It'll be interesting to see what Yearn does as far as being able to enable cross-chain strategies where maybe you can still have one asset but it's running a strategy that might live on layer 1, but it might have some connection to, layer 2, or some communication between different layers or other chains where it can run strategies that deploy assets on those chains. Nothing like that is running right now, but wouldn't shock me. So yeah, it's probably something later in the year maybe that we'll have to address once some of these protocols start launching up on other chains. Sweet. I think that's all the questions from the chat. Anyone toss them in there, or if anyone wants to pop in and ask any verbal questions, we'll give it a minute, and then I guess we can open up to any other stuff. Bum, 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 bum. All right, cool. Yeah, I think that's it for ibBTC. Yeah, I think that's it for ibBTC. Like I said, there'll be more information coming soon as we approach launch. I think we're really just a couple weeks away. And there'll be information about how to mint it, how to we've gotten the UI all worked out, where the LP will be, what the incentives will be, et cetera, et cetera. And then we'll be making that push to try to get it on wherever we have stuff running on other layers and chains as well. Cool. Yeah, I'll open the floor. Anyone else have anything else they want to chat about? Have you ever thought about doing a rebasing token that tracks Bitcoin volatility rather than Bitcoin its first derivative? I personally have not thought about doing that. I feel like I've seen some things like that where people are looking to do more limited run, like future type tokens, like on UMA, that track volatility. I think the biggest thing is just, okay, what's your oracle, right? If you could look at, if you could do a calc based on, the Uniswap oracle, I haven't seen anyone do. It's actually surprising. I feel like someone should make the default Uniswap or SushiSwap on-chain price oracle volatility calc. But yeah, I you can rebase to whatever the heck you want. I don't know if it would. I think the people that would want to use that product would probably want it as a hedge, right? And I don't know if, because rebasing, the thing itself just doesn't make it. As you can see with Dig, like you just launch it, rebases. That alone doesn't help it keep the peg. Like you're going to need other stuff to do it, and it's going to take assets and energy and things like that. I think for a volatility thing, the first step would be, I don't know, $1,500 Badger. Is that something you think you would want to hold for the long term, or you think of it more of just like a hedge? Yeah. So I think for the hedging, I think something more like UMA would probably make sense. Where you figure out the oracle, and then you can have monthly expiry on it, which I think people that are into hedging positions are pretty comfortable with. I don't know if anyone's done it yet. Yeah, volatility. Yes. Oh, yeah. So you want like a VIX? You want the we call it BIX, like the VIX for Bitcoin. Yeah, part of it would mean picking a Bitcoin, VIX dig, dig VIX. There has been some talk about inverse dig, launching basically the opposite of dig, that rebases positively when it goes down and then negatively when it goes up. I don't know what the implications of that would be.
Where are we at with the stability mechanism with regards to dig?
Yeah, the stability vault is in QuantStamp's hands right now. I think we're hoping to have results from the audit, if not end of this week, maybe mid next week, early to mid next week. It's on me to do a write-up on how it works. Right now, the structure is that there are a couple different parameter inputs. So there's going to be two big things. One is just how it works, period. And right now it'll sell dig for WBTC when above peg, but only when the price is falling. So, and that means, and it's basically on rebases when it does its quote unquote rebalancing or what have you. So if dig's on a nice big run, it's not going to like get in the way. But as dig starts kind of coming down, but it's still above peg, it'll start kind of stocking away Bitcoin, WBTC. So it'll start selling the positive rebases, portion of the positive rebases for whatever's in the vault, stocking up WBTC. And similarly, when it's going down, it kind of waits for it to start coming back up. And as the price starts moving back up, while it's under peg, and like I said, it's the price is pegged, rebase time to rebase time, 24-hour periods for determining whether the price is going up or down. That's when it'll start buying the asset. So the idea is kind of like more go with the momentum a bit to push it back to where it goes, and hopefully those swings just get smaller over time. And then we have there's some parameters to play with as far as the degree to which it deploys the assets that are in the vault. So yeah, I'll be sharing some more information on that soon. And then we also have just how we're going to deploy it, because we need to get assets into it. We want to, it's very experimental. It's new. It's not going to be just a YOLO open, uncapped pool out of the gate. But what are the steps we want to take to, we're only going to allow, $1 million or $10 million worth in there, to then saying, it's uncapped. And long term, we would like it to actually, for BDIG to be the stability vault.
Cool, thanks.
No problem. Cookie's asking about why I think BDIG and ibBTC will be differentiate. So there's, dig is an extreme, right? It's just like how ample is an extreme. It's, ample and any other rebasing asset. What they're trying to solve for is, let's have something that people can hold that will give them exposure to some asset that exists outside of this space, that isn't native on chain, like ETH, or other ERC20s that are, like Link or something, that doesn't have any custody risk, and is reasonably stable relative to the asset it's supposed to track. So WBTC, there's custody risk in that at any time you could get blacklisted, and you could not, your WBTC could be frozen or stolen or what have you. Same with like USDC. Doesn't it hasn't happened yet. Really, it's not like this is something that we're expecting to happen immediately, but it's let's experiment with how we can have these pegged assets that don't have that custody risk. That's what rebasing is trying to do. It's still very much in experimental mode. So I think the difference is with ibBTC, it's going to have a whole lot of WBTC behind it. It's going to have a whole lot of MBTC behind it. It's going to have a whole lot of SBTC behind it. It's all these different BTC equivalents that have different, risks associated with them, right? Like SBTC with synthetics, like, it's been a very good asset. It's done what it's supposed to do, but it's still backed by the it's debt backed by staked synthetic tokens. So like if something's happened with the SNX tokens, like it can am I missing something? Get a little bar by shit. Can everyone else hear me okay? I think VLK is coming in and out.
I can hear you.
Okay, cool. Yeah. So, if you're holding ibBTC, like you're kind of saying, okay, I'm cool with these different types of Bitcoin. I don't really have strong opinions one way or the other, because if someone comes after WBTC, they'd have to like blacklist the smart contracts or whatever. Like, it could happen. Now, if you want to go to the extreme, be like, I want Bitcoin exposure. I want it on Ethereum, but I don't want to worry about any custody risk. I don't like what RenBTC does, and I don't like what SBTC does. I want it to be like basically like an on-chain native asset. That's what Dig is kind of intended to do. And, we're still in the experimental phase. So even if we get it to being stable, and, how long will this experiment last? I don't know, probably at least, I wouldn't expect it to take any less than a year for anyone to feel comfortable looking at Dig and saying, hey, this is a stable thing I can use to denominate my portfolio in. If I want to denominate my portfolio in Bitcoin. So even if we reach stability, I think it's just going to be, it's going to be a different thing. It's going to be which risks are you cool with, and go from there. Like, would it be cool to eventually include Dig in ibBTC? Sure, but I think it would take a while till people should feel comfortable doing that because it's still very experimental. I think there is a valid use case for it, but it's I tell her I'm not. I never sugarcoat it. Like it's a speculative thing right now. But it's worth experimenting, and it's pretty cool. Acquire both will be. Scrolling here. $1,500 Badger. Yeah, just tightening the rebasing parameters. I'm assuming you're saying just have it even rebase less per rebase period. Yeah, it's other way around. Rebase more. So instead of having 10%, have it 20%. Is that right? Okay. Yeah, I don't know. It's market psychology, right? I think when it bottomed out before, it was mainly, it got attractive enough for the speculators to come in. It got to be a smaller market cap. They came in, then we launched the vaults on Binance, which offered some, high yield to Dig. So there's a little demand there. And then, obviously the meme competition, we were able to kind of get it above peg for at least a couple days. I don't know. I haven't, I honestly haven't seen, I don't know if any of the rebasing assets have played around with the parameter. I'm not sure if it would make the, it would make us finding equilibrium where that bottom is quicker, I guess, because instead of losing, if it's half of Bitcoin's value, instead of losing 5% a day, you're losing 10% a day in your overall value of it, which makes it less attractive for people to hold, which might inspire more people to sell. But I would imagine it would increase volatility, which I guess is what you're saying might not be the worst thing in the world. my take is on it. We just need more utility. I think the stability set will be helpful because it's basically like inserting a altruistic whale into the equation, right? That'll be somewhat of a rational, an optimistic rational actor. Cookies, we say more utility to dig. It's like, making bdig available as collateral on different lending platforms. So that's something that we have coming down the pike. And wherever else we can get it incentivized as a LP token. In Cometh, we got it locked up in there. You can do some games with it. I think anytime you can make something an available collateral, I think that's cool. One thing I was just thinking about the other day is we kind of, I don't know how many other assets we might end up having that are part of like the Badger ecosystem or world, but I don't know if people have been following Fuse by Rari. It's basically like a fork of Compound, but you can it's basically like a launch your own compound. And then, what we could do is we could have a Badger, basically our own Badger lending pools where we approve the assets that are, available as collateral, and for borrowing, and we could, just put all of our assets in there, and we don't have to. Community can vote what we make available, but I don't know. What do people think about that? I think we could get our stuff added to other people's pools as well, but would they find it compelling to basically have our own compound where you can have your Badger, bBadger, and bdig as collateral, and ibBTC as collateral, and you could borrow, USDC or DAI or WBTC or ETH. You put the majors in there as well. I don't know. Would people find that compelling? Feld likes it. I'll take it. One out of 15 vote, 6%. That's quorum. Yeah, if you don't know. Yeah, I do think we're going to do something like bdig should be showing up on other lending protocols as well, because obviously they'll have more liquidity. I saw something pop up that someone wanted to speak.
Yeah, I think Rob did.
Yeah, but I don't know. You should just be able to unmute and talk, I think, right? Rob, if you're... Oh, you just clicked the hand button. Rob, you got it. You got something?
Did it work?
I think maybe he just...
Maybe it was an accident.
Yeah, maybe you're just clicking buttons. Yeah, maybe he's just raising his hand for hey, he thought that would be a good idea. Should Badger launch its own? Yeah, we'll do. Hey, this will be fun. Yeah, raise your hand if you think Badger should have its own compound fork using Rari Fuse.
Oh.
Hey, nice.
Sweet, it worked.
Cool. Yeah. Boom. Quorum.
Sure, they didn't even actually want to speak.
Yeah, that's a nice little tool.
For sure. So we're coming up at to 12:50 here, so a bit overtime. We could look to wrap soon if you'd like, John.
Yeah, I think it's good. Yeah, anything? Take any last questions anyone want to ask, but really appreciate all the questions and digging into this stuff. Thank you, $1,500 Badger. I haven't figured out a good way to shorten that yet. Cool, awesome. Well, thanks everyone. Cookies, yeah, Bitcoin stable. Yeah. So Cookies, if you're new to all this, yeah, dig. It's speculative. You can play around with it. If you really want Bitcoin exposure, ibBTC, we think will probably be your best bet. And then also, get ready for the Yearn WBTC. The easiest way to get into earning some yield, I think, will be when we get the Yearn WBTC vault up and running in the next week or two. Once that's uncapped and open to everyone, then take your WBTC, deposit in there, you're earning yield, good to go. I don't know what the order of operations will be for having that live versus ibBTC listed on and liquid on markets, but either one of those will be great bets for getting Bitcoin exposure that's stable. I tell people that DIG's fun to play with, but if you're new, don't go into it and be like, oh, I want Bitcoin exposure, and then you wake up and you have less tokens than you did yesterday. You learn about it if you want to ape into it, then go for it. But do your own research. Cool. Awesome. Well, thanks everyone. Appreciate it. Keep an eye out for, I guess, 2 weeks from today. I'm actually going to be mostly out next week anyway, with some family time after a wild couple months with Patrick here. So look forward to chatting again then. And thanks, Will.
Thanks, everybody. We'll put this up available on YouTube as well. So stay tuned for that. And yeah, we'll see everybody in a couple of weeks.